By now, most of you still struggle on how to construct key level. Yes, without key level, you can't do anything in trading. What is key level? This is your support and resistance. This is your demand and supply. Structural zones, whatever you want to call them, just know they are all point of interest in the market. So you as a trader trying to trade and you do not know how to construct this level, you will always get yourself into trouble, right? And for those of you who have been asking me, how do I connect or plot my key levels, support, resistance, demand, supply, structural zones? In this video, I am going to show you everything you need to know on how to mark your support and resistance. I have a special video, a full tutorial guide on support and resistance in trading, how you can use it, how you can construct it. But this is just a quick guide, a summary, right? So in this tutorial, I am not going to go into what is support, what is resistance. I believe you all know that, but I just want to show you the right way for you to mark this support and resistance on your chart, how to mark your supply and demand on your price chart, right? So if you would like to receive more valuable content, trading tutorial videos on this channel, subscribe, like, put a comment down. I want more tutorial videos on how to trade the financial market. Now, the good news about this tutorial or this concept, which I want to show you in this video, is you can apply this tactic to trade any market of choice: forex, crypto, stocks, commodity, index market. Just name that technical analysis price chart. You can use this concept of marking your support and resistance. Now, I will use the DXY, that is the dollar index, right? DXY is an instrument that measures the performance, the strength, the weakness of the USD, that is the American dollar. Right now, the first thing I do based on my trading methodology, for those who know me, those who have been trading along with me, you know I'm a position trader and a swing trader. Now the question is, if I want to mark my key levels, where should I start marking my key level? This is what traders want to know, right? But before we dive into that, first I would like to make references to the different trading methodology we have in technical analysis. So I want you to replicate this into your trading methodology. So in this tutorial, I will focus on position and swing. So if you're a day trader, scalpers, replicate the concept I'm going to show you in this tutorial. Now, number one, let's make some writings on this section right here. We have what we call the position trader. Position trader, right? These traders start their analysis from the monthly chart. Right? But personally, I love to start mine from what? From the 3-month chart. So 3 months, that is 3M, and then all the way to 1 month, all the way to weekly chart, and then all the way to day chart. All the way to day chart, and then all the way to 4-hour chart. So that is how I do my analysis, right? That is for a position trader. Now, we have the swing trader. Okay? The swing trader, these traders start their analysis from what? This could be from the 1 month chart, but mostly it will be from the 1 month chart. Now, we have the weekly chart, we have the day chart, we have the 4-hour chart, and we have all the way to the 1-hour chart, right? Okay, good. Now, we have what we call the day trader, right? Now, don't mind my typing. Day trader, we have from the what? From the weekly chart to the day chart to the 4-hour chart to the 1-hour chart, and then to the what? 15-minute chart. That's a day trader, right? Now, we have the scalp, those who scalp. Now, okay, now we have them, the scalp trader, now they start the analysis from what? it is better you start your analysis from the day chart. I know some of you might say, oh, scalpers should start their analysis from the 4-hour chart and day traders from the day chart. I have a reason for not starting from the day chart for day trader, and the reason for not starting from the 4-hour for the scalpers, right? I will explain. I'll give details about that. Okay. Now, scalpers, we have from the day to the 4-hour chart, all the way to the 1-hour chart, all the way to 15-minute chart, and all the way to the 1 minute or whatever. But I suggest don't go below 5-minute chart. The scalper. Now, these are the trading methodology you need to understand as a trader. Although there is a news trading concept, but the news trading concept, it's a different concept entirely on its own. There's a way you combine news trading with technical analysis. If you are interested in that tutorial, just put a comment down, technical plus fundamental, and I will tag you once the video is ready. Alternatively, tap on the subscribe button on this channel, enable the notification bell so that whenever I post this content, you will see it on your notification section of your device. Right? Alternatively, you can check the description of this video. Maybe I've created a content on that, and maybe I've posted the link to the tutorial in this video. All right, now let's get back to the beginning. Position trader right here. Most position traders will start their analysis from the 1-month chart, but I love to start mine from the 3-month chart. Right? So you can start yours from the 1-month chart, but starting mine from the 3-month chart means I have to relate what I can see on the 3-month to the 1-month chart. Right? Now, as a swing trader, I'm also a swing trader. I relate my 1-month chart to my weekly chart. Right? Good. So as a day trader, you can start your chart from the day time frame, and that is why it is called day trader. But I advise, please try to relate the weekly chart plus your day chart. Relating the weekly chart plus your day chart helps you to have a high winning probability or powerful setups. And now scalpers, trying to analyze the price chart from the 4-hour chart as a scalper, there's nothing bad about that, but I think it is important to check the day chart, because the day chart is the universal time frame, irrespective of any trading methodology you want to apply as a trader in the forex, crypto, stocks, commodity, or index market. You need to implement the day time frame. Why is this so? Because the day time frame is the universal time frame. You need to get that into your brain. Understand that the day time frame is the universal time frame. So if you are trying to run any analysis and you ignore the day chart, well, we are not approaching trading the professional way. Because I am not a scalper or a day trader doesn't mean I have to condemn or criticize that concept. No, but I am against it if you do not implement the day time frame into your analysis. All right, good. Now, in this tutorial, I'm going to relate my key level structure from the 3 months to the 1 month, from the 1 month to the weekly chart, because I am a position trader and a swing trader. All right, now let's get that started right now. So we delete this. Now, this is the 3-month chart of the DXY. Now, if I open my chart and then I want to mark my key level structure, this is what I'm going to do, right? So I mark my key level structure right from the high swing here. That is the major level. We have major level, intermediate level, and minor levels, right? That is another concept. I won't dive deep into that in this tutorial. If you are interested in trends analysis, also put a comment down, trend analysis, and I will create a video on that. So we have 3 types of trend: major trends, intermediate trend, and minor trend. Major trend are called long-term trend, and intermediate trend are called speculative trend, and minor trend are called short-term trend, right? So major trend are trend that elapse the 12-month calendar period, and intermediate trend are trend within what? Within the 12-month calendar period, and the short-term trend or minor trend are trend within what? Within the 6-month calendar period. Okay, now based on what I have right here, I have from the July 2021, so that is a major key level structure. So this is why I need to mark this level right here. And at the bottom, I have another key level right here, a major turning point 2006. That is a major key level structure. So I mark that. And we have some levels we mark right here. I mark that zones. Now, this is where some traders get things difficult, right, for themselves. It is not necessary you have to mark your key level with horizontal lines. There are some situations whereby you see some levels, some highs and lows in the market which are closely or almost tied together. So it doesn't make sense for you to have two horizontal lines at the same, almost the same zone. So what you can do in this type of situation is just use the rectangular tool on your price chart and just try to connect the lows of candlestick that aligns at the same level. As you can see right here on this price chart, we have some lows here, lows at this level, and some highs and the highs. Now, instead of trying to capture these lows and these lows and these highs, also these highs, and then using two horizontal line, it doesn't make sense. Now, what am I gonna do? This is what you're gonna do if you are confused. But if I were you, I will just have my key level structure right here. But if you are a beginner trader, this is what you need to do. Now, click on your rectangular tool, right, and then you mark the lows of this bar at the right hand side. You fired it to the left hand side, and then you capture the streaks of the eyes on the left hand side. Once you do that, then you extend your rectangular tool to the what, to the right hand side. Now we have a key level structure right there. But you can leave this horizontal line right there so that it can help you to pinpoint the actual price level on your price scale. That is done. That has been solved. Now we proceed further. We mark another key level structures right there. You can see that. Now, marking this key level structure right here, I'm going to change the color of this key level because, or why shouldn't I leave this horizontal line to be orange color or horizontal orange color? Now, this is the reason right here. Now, study what we have right here. Price broke through this key level structure multiple times. We have price dancing up through this level right here. Whenever price dance through a key level, support, resistance multiple times, then it means the strength of such key level has been voided. It means the key level has been invalidated. A key level can be invalidated whereby it's been taken out, breaking out, just like what we had right here on the 1st of October 2014. But right here we had multiple tests, breakout, breakthrough, break to the upside, to the downside multiple times. So this shows us right here that this key level is not a significant or powerful key level anymore. All right, now what I'm going to do right here to signify, okay, this level is not a potential or powerful key level structure, is I need to change the color of this horizontal line to something different from the other red lines, to something like a black. Now this is showing me that, okay, this is a key level structure, but it is not as effective or powerful unlike what we have at the price of the 70.78 or 88.312. You can see this key level structure held price only went through once, right here as a turning major swings, and the right here price broke it. Now we proceed forward on this price chart. We mark another key level structure, or the major swings, or the current major swings in this market. Now we mark the highs. This time around we have to change the color back to what? To orange or red. You can use any color of choice, but I love to use the orange and the black color. You can see that. So I capture the highs of 1st of July 2022 and the highs of 3rd of October 2022. You can see that. Now I have my major key level structures marked on this price chart. This is a clean chart, but we are not yet done. These levels are major swings in the market. Whenever price trade into this level, these are levels I always look out for a very large positions, because they are powerful zones in the market. And I always look out for diamond setups at this level. These are levels where I execute A. Whenever I see an A setup, I always refer to them as diamond setups in the market, right? Now we now go to the monthly chart. On the monthly chart right here, you can see on the monthly chart right here, the next thing I want to do is to relate what I have on the 3-month to the monthly chart. So on the monthly chart, this level is still perfectly aligned. Now what I need to do right now is to look out for more structures I can mark on the monthly chart. So this time around, I am going to use rectangular tools, and I have a different ways of using my rectangular tools. I have different colors. I do not know the color right here. Maybe this is light blue or sky blue, whatever. I just know this is something like belongs to this kind of a sky blue or whatever. So this level right edge, or this color right here of my rectangle toolbox right here, showed me that this level has once been breached. So we have a breach of this price on the 1st of December. That is the month of December 2014, right? We breached this level on the monthly chart. Now I need to construct another structures at these level zones here. At these zones right here, we can see we have consolidation phase. Now for me to construct key levels at this level, I need to use my rectangular tool, because this is a minor structures right here for me based on position trading. Now I mark this level with a rectangular tool. I capture first. I need to capture the eyes here. That is the only eyes I can capture right here, and I can capture this eyes as well. And then I can capture the lows right here, or the lows on these bottoms. Now let's use our rectangular tool, because if I were to use my horizontal line right here, it can't really fit in properly, and this chart won't look like a kind of a nice chart to me. So there isn't any rigid rule right here. Just do what is easy for you to analyze, what you can easily glance through. So I mark this level right here, and then I'm going to change the color of this sky rectangle to gray color. And why am I changing this to gray color? That is a great question. Now the reason why I'm changing this to a gray color is because this level right here is yet to be broken. Yes, it's yet to be broken. You can see right from the test of this level, price is still rallying within below this level. So this is why I changed the color to a gray rectangular box. Unlike what we had right here, price broke out. This is why this rectangular to right here is in a sky blue color. So that is the way I represent my key level. So whenever you are going through my price chart and you can see gray rectangle, sky blue colors, orange horizontal lines, and black horizontal lines, you should know what they mean right now. Now I'm going to replicate this to the bottom. Now we have this at the bottom. I track the series of lows in this market. Now we have this, and then I fit this to align to these zones. Now you can see we have a clean chart. Now as a position trader, the price chart right here is ready for me to trade next month, next few months to come. Now we go to the weekly chart. On the weekly chart, I have a clean chart. I have a clean chart, the cleanest chart ever in trading history. Yes, I can brag about this. I can brag about this. Now, opening this chart without even taking a trade, I'm happy I have a clean chart like this. Now, you can see how price respected this demand. Okay, I forgot to tell you something. So, my rectangular boxes on my price chart are demand and supply. These are what I call demand and supply. Whereas my horizontal lines are what I called support and resistance. So right here, you can call this a support or demand. It's welcome, but just understand that support, resistance, demand, supply, they all mean the same thing. The name doesn't really matter, but what really matters is you know the technical implication of what they mean or what they refer to when you see them on the price chart. Calling it demand, calling it supply, support, resistance is not what's going to give you the money. What is going to put money into your portfolio or your trading account is for you to understand the technical concept of what they mean whenever they form on your price chart. So right here on my price chart, I can see a lot of traders were buying right here. So this is a level of support or demand. So what I need to do right here is to look out for a buy setup or long setup. So I do not need to stress myself and start saying, is this support, is this demand, is this supply, is this resistance? You don't need that, right? Just keep it simple. Now we get this off right here, and we can see our price navigated through this range band medium. Can see that? Actually, I missed this setup, and let me show you why I missed this setup on the DXY. I saw this breakout. I was waiting for what? For a retracement so that I can reduce my risk. so that I can increase my profit ratio, whereby I have my entry at this zone, I have my stop, because this weekly bar is a kind of too long weekly bar, so I can ride it all the way up to the supply for 4:1 ratio. So that was why I made this setup. But I was happy I made this setup because I followed my principles, my disciplinary principles. Yes. Now let's go to the what? To the day chart. On the day chart, we have some minor structures on the day chart. All these minor structures, I only use them for trend continuation or retest entry. So on the day chart, I can just mark some levels like this. Can see that? So I have a blue rectangular box which is not shaded, so I know this is a level on the day chart, minor structures. So I was actually waiting for a pushback into these structural zones here. So in summary, this is how you construct key levels on your trading chart. This is how you construct key levels on your trading chart. It's so simple as that. So just keep it simple. Keep it simple. It's not a rocket science. Just keep it simple. And some of you might ask, oh, what about a 4-hour chart? What about a 4-hour chart? No, I'm not a fan of constructing levels on the 4-hour chart because I'm a positional swing trader. So constructing levels, I can only construct my level from the day chart and then relate it to the 4-hour chart. Unlike I constructed this box, this blue box right here on the day chart. On the day chart, this is what we have on the day chart. On the weekly chart, we have a series of highs taken out that week. On the monthly chart, I have a highs of what? Of the month of September 2024. Let's try to reveal this on the monthly chart so that you can see the highs we have. I have another trading concept of how to trade highs and lows in the market, and this is one of my favorite trading concepts. You can see that highs was taken out, so I was waiting for a retest. So let's get back to the day chart. So this is it right here. So this is how we construct support, resistance, demand, supply in the simplest way. So some smart money traders or ICT, whatever they call themselves, right here now they can see a lot of liquidities right here for a short entry, right? There's nothing bad about that. We talk about this in the latest maybe tutorials on how to trade liquidity zones in the market, right? So this is how we trade. This is how we mark our key levels, support, resistance, demand, and supply. If you enjoyed this video, just hit that subscribe button. Subscribe, it costs nothing. Hit on the notification bell so that you do not miss upcoming valuable tutorial content on this channel. Like, put a comment down, and most importantly, share this video to help struggling traders who might be in need of this tutorial. I will see you in the next one. Remember to join my Telegram group. This way I share free trading content, setups, trading signals. Peace.